Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to fluctuate amid rising geopolitical tension and strong demand for safe haven assets. Volatility was evident in the Wednesday's session, driven by concerns over potential nuclear escalation in the Russia-Ukraine war. Along with that, the technicals have somewhat firmed up, and therefore from the mixed reaction that we saw in the trade on Wednesday, I feel there is further gains to come in today's session and look towards a region of 65.40-45, which could lead on to 66 cents. Any down test likely to be limited, with support seen around 64.65 to 90. Turning to the euro, it was a little bit whipsawed as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded to 106.55. Nevertheless, from the given technicals, the rejection from this trend line and also the dragonfly doji gives further scope towards the upside and maybe even on towards the region of 106.05, where a break there would see further scope to 107. I like the way the market is setting itself up for a potential rally, and therefore any down test should be limited with the support seen around 105. Turning to dollar yen, the market still persists in taking the challenge to the support line, which broadly looks around 154.50. I feel the market is likely to take this level out and therefore see a significant downturn, and a close under 154.5 should give us a view to 152.40-60 and reassess from there, just in case we're looking lower towards the region of 149. In light of the current uptest, I feel the market is likely to fail towards the region of the 155.5 to 155.90. The market was a little bit mixed after hotter than expected UK inflation, which has now possibly ruled out a December rate cut by the Bank of England. October CPI data rose to 2.3% versus a 2.2 expected forecast, with the core CPI coming in at 3.3, while the services inflation, which is what the Bank of England looks at, was unchanged at 5%. From the technical indication, I feel the market has staged or at least found the base around 126 and could see a move towards that topside level around 127.15.25. A break there would give further scope towards the upside and bring in the target around 128 to possibly 129 and reassess from there. Technicals are shaping up to the bullish potential of this outlook and therefore should see further gains in the coming session. Since bouncing off 2,550, gold has not pulled back and now reaching its target of 2,660 could see further gains on towards 2,700. In light of how the market's shaped, I feel there is potential of even further than 2007, but let's play one step at a time. Any pullback likely to find support on the day around 2,635 to 37. Wrapping up with vol, still remains steady since posting this engulfing candle, and I am still viewing the market to take the challenge on to $70 to $72 a barrel, with any pullback limited around 68.5. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the day.